We're going to do a brief video today on Disney stock and Disney stock analysis. We're taking a look at a Disney stock price chart, and we've scrolled back in time a little bit because I want to show you several things. We've got three moving averages on here. We have a 5-day, a 20-day, and a 200-day moving average. If we start back here on the daily chart, you can see all the way down here on the bottom. This is about March of 2020. This was just after or right around the beginning of COVID. And as we can see, this blue line is the 200-day moving average. As we can see, we put in a bottom here, a hard bottom very quickly, and then we started to rally. We got above the 200-day moving average, and Disney pretty much got way ahead of itself, as can be seen by this huge area under the 200-day moving average. You would expect a sustainable rally to have hugged the 200-day moving average, but it almost never does. So as you can see, we rallied up and now we've fallen back. So I show you this section to move forward to this section. You can see now it corrected, it went sideways, it ran into its 200-day moving average, and now it's become a bear market. This was a good solid COVID bull market, right? But now we're in a bear market. We're below the 200-day moving average. We have right here a significant gap, and I want to talk to you about the gaps in a minute, but you can see this gap here. This is a 20-day moving average, 5-day moving average. So we're in a significant bear market through here, and it looks like in July, middle of July, we put in at least a short-term bottom at around the $90 area. So what's happening today is you're getting another gap to the upside. As you can see, there's several things going on. You got an upward trend in your 5-day moving average. You got a turn to the upward side, a good decent turn on the 20-day moving average. So there's definitely buy signals, and you have a gap here. But what's going on is we're gapping straight into a huge headwind, which is the 200-day moving average. Also, let's talk about gaps for a minute. The problem with a gap is, in any market that you see it, it's extremely risky to trade a gapping market. But the other thing about gaps is they almost always get filled. So let's just examine that statement real quick. We have a gap here. I expect this to go up to some distance and come back and fill this gap. If you look here, we had gaps here, and of course the price has now come up and filled those gaps. We had a gap here, from here to here, and the price came back up and filled it. We had a gap from here to here, and the price dropped back down and filled it, and so on. We have this huge gap here from about the $173 range to the $163 range, and we can eventually expect that gap to be filled, but that may take a long time. We're about, what, 40 bucks away from that right now. But the point of it is, whenever you see gaps in a market like this, you can expect that gap to be filled. It may take a couple weeks, a couple months, but you can bet your dollar that that's going to be filled at some point. Of course, everything I'm discussing is my opinion only. It's all for entertainment purposes only, but gaps are usually filled. Keep that in mind. So from a technical analysis perspective, this market is in a bear market rally. We're approaching a test of a 200-day moving average. The 200-day moving average in the stock market is a very important number. As you can see, when you make significant closes over a period of time below the 200-day moving average, you're in a bear market. And so same thing applies to a bull market. We're now still in a bear market in Disney with a bear market rally, and we're getting ahead of ourselves because we're gapping. So that's where this stock is today from a technical analysis perspective. I expect, my opinion only, for entertainment purposes only, this stock to probably come up here and exceed the 200-day moving average, probably close above it around the 140 mark. We're currently today around 123. Wouldn't surprise me at all if you got in the mid 130s to 140, and then a drop back around here someplace, probably September, October, back to below to fill this gap. Might be around here, this area, maybe November, and get back below the 112s. That's what I see today. Again, all my opinion only. But from a technical analysis perspective, Disney's in what I would consider to be a fairly decent bear market rally. Keep in mind, this is not how I would trade this stock. RBAM Research puts out stock prices every day, Monday through Friday. We have a 1-day, a 5-day, and a 20-day hold. And this is what we use to trade these prices if we're looking at them for our own personal use. Again, these are just suggested reference points from your perspective. They're for entertainment purposes only, and you should never use them to enter the stock just use them, if at all, to for entertainment and to verify, or to at least give you some ideas as to what you might do with these stocks. If we scroll down here and try to find Disney, I think today Disney does not have a price on it. Let's see if we can find it. Walt Disney right here has no prices at all. That means that there's no buy signals today. This is 1, 5, and 20-day signals. You can see eBay today has some suggested points to look at, 47, 48, and 48. But Disney has nothing today. That's probably going to happen with Disney probably 10 or 20% of the time. Most of the time there'll be entry prices on here. But what these are algorithmically generated entry prices. And if we take a look at Kohl's, for example, if you wanted to trade it for 1 day, this would be an entry price to keep an eye on. 5 days and 20 days here. Those are suggested holding periods. So that would be the max you'd hold the stock. You purchase today, close out tomorrow, purchase today, close out 5 trading days, purchase today, close out 20 trading days, and those are all worst case. The way these algorithms work, if it's assuming it's confirmed by your own research, you can get in and get out worst case at those holding periods. Again, 1, 5, and 20-day holding periods. If you get a profit today or tomorrow, you take it. So whenever you get a profit, you take it. Worst case, you close it out at a loss at the end of the holding periods. And again, these are trading day periods, not calendar days. These are updated every day, Monday through Friday, at rbamresearch.com. You can subscribe for free. It's absolutely no cost. Let me get down here and show you how to do that. You can subscribe and you get access to 190 stocks. They're longs only. Forex, we cover all the major pairs. They're long and shorts. Crypto, we currently cover Bitcoin, long and short, and then the most liquid futures contracts, longs and shorts. They're updated every morning by 7 a.m. You can get them for free at rbamresearch.com. You just go there and subscribe, and there's no credit card required. It's absolutely free. If you like this video, please click the like button. If you want to subscribe, please do that. And please keep in mind that everything in this video, including the entry prices we offer, are for entertainment purposes only, and you definitely trade at your own risk.